Hello, everyone. How's everyone doing? I hope everyone's having a good day. So it's just around 9 minutes ahead of 9:30. And before we get into the minutes charts, I want to go over just what happened today and within yesterday. So yesterday was a kind of a bullish reversal day. We had this long wick here moving into this 4-hour gap, and we started to move higher. We also have this wick here. You can note this rejection off of the CE of this wick. That sent us higher. We pushed lower once. We failed to move lower into the CE of the wick. We can refine this even lower. Drop down to here. Drag this out. Rejection of this wick, taking us higher right now. Daily time frame, we are in a CB, sell side inefficiency, buy side imbalance. And daily, we had this mitigation block here, high, low, higher high, then we failed to make a lower low. I'm taking only the portion that includes the bodies of this because the wicks are too abnormal for me. This wick especially here is too big for my liking. So yeah, you can also, the hard time frame wick is in alignment with this candle as well. So you can see this quadrant, this lower quadrant, lines up with this wick. Notice the first tap of the consequent encroachment and the second tap. So I'm gonna take off this drawing here actually. Just had it there for visual purposes, but we can do without it. So we had that breaker. I just posted a video speaking more in depth about this here. The breaker supported price once. Price failed to go back into the breaker and had an SNT with the Dow, where the Dow briefly took this low and started to move higher. So the previous high here that we were mentioning right now is being met, and we are inside of the daily CB, and this whole wick here is 9:30, and we'll get more into that. But before we do that, note the current order flow. Bullish order flow, bullish order flow off of this wick here, bullish order flow off of this order block, and right now a retracement back into this new day opening gap, which let's drop it to the 5-minute and we can have some more insights on that. So this new day opening gap, Monday's closing price, and then we have here Monday's open price. This is 6 p.m. opening price. So this here is new day opening gap on settlement price. Sorry about that. I was saying this is the settlement price difference between Monday and Monday 5 p.m. and Monday 6 p.m. So there's a new day opening gap. Look at how price fills it, then moves into it once, rejects, moves lower, moves into it one more time, rejects lower. Then we have this wick here. Pay attention to these numbers here: 722.75, 722.00. The high of this wick is 727.00. Note the open of this candle here: 722.75, 722.75. Then we had this retracement here into this wick that filled the entire open gap, and we saw a drop lower. Let's move into what's happening right now. So the 15-minute, you can see that we are back into this new opening gap. I want to see if this is going to be held as resistance or if it's going to be pushed through. Really quickly, let's move into the regular trading hours and let's delineate the opening range gap low. Let's make this a pink or purple actually. Create that. Opening range gap high. Find the consequent approachment. Range gap C. So let's go back into the electron trade now. So let's move to the 5 minute really quickly. Oops. Okay, so this entire green part is the weekly reclaimed fair value gap. So note how price first runs high during 9:30, then drops lower. Below this intermediate term low, closing below it, but finding respect on this here. That gap is within the opening gap low. So this is a big section of price where arrays are overlapped. This would be like a big black hole for price. So the fair value gap here, the intermediate term low, the daily CB. Note the CB low is at 734.75. The low of this candle is 734.50. So perfect respect. Okay, so price, let's move to moment now. I think that will be much clear. So remember the 5 minute gap that was at the underdog low, and there was intermediate term low, which is this low here. We dip below it. We have a volume imbalance here that is being held. And this is the first presentation for value gap, which gets inversed. And now we're finding resistance off of the consequent encroachment. So I want to see if price has found resistance off of this kind of overlapping array section here and wants to push through this inversion here. If not, it's going to find support off of, resistance off of this fair value gap here, this small one here, or this big first presentation inversion gap. Drag this here. So really quickly, pay attention to where my mouse is actually turned on. Pay attention to this price level here, 728.50. Note the open of this candle, 728.5, 0.75, sorry. So the opening range gap consequent encroachment seems to be respected. There is a order block within here, so this is a second sweep on this low as a first mitigation. So I'm gonna note that as a sweep. So if this gets pushed through and becomes reclaimed, it might be safe to say that this will become the neutral liquidity, the daily CPI, or these. I'm pretty sure these are equal highs, correct? Yep, equal highs. So this is engineering liquidity here. Price wants to close above this, then it might be safe to say that this will be a neutral liquidity, or these two highs. So price has breached the consequent encroachment level of this CB here, this inversion here that we were previously respecting. I want to note this volume imbalance here. Put that in blue. So you can see there's multiple stabs at this volume imbalance, but no body closes. So see this wick reaches all the way down here, but then quickly retreats and closes all the way back up here. Just give me a second. I want to pull up my chat really quickly. See how's everyone. Um, Hello, Nico Nesto. First FVG of open can't be the 930 candle itself. I know, but I'm only taking this gap here because this one is the more this one is the more discount gap. So if price inverses this first presentation gap here, you can allow it to drop back here, and this will still remain in respect. I know that ICT says that this candle here it starts at 929, and then this candle here opens at 930. I know that, but um, this gap here, I only wrote it down because it was more discount. Yeah, but if it makes you if it looks better visually, I'll do this. So, it makes more sense. Well, now it's a premium, so I don't know why I wrote it down. I'll highlight this wick here. Notice the respect of the construct of the pushing level. It's fine with me. Make sure to do what helps you understand price best. Yeah, thank you. Just I just wrote it on because you're right. It does look kind of confusing visually when I have this gap drawn on instead of the first presentation. But it works for me as well. I don't mind having too much drawings on mine. I work better when there is lots of drawings on my chart. Do you actively trade? Yes, but I have rules that don't allow me to pull on trades every day, but I review every single day's price action. So price has dipped down once more, completely inverted the volume imbalance. So I want to take that off. Actually, no, I'm not going to take this off because this volume imbalance here is a balanced volume imbalance because you can see we have this candle here dropping violently lower, failing to touch this low, and then we have that candle rushing up higher and then completely balancing this inversion here. So now this becomes a balanced gap. There's no point in writing it down because you're not going to be able to see it, but this blue section here is now a balanced volume imbalance. So price can go back down to this level here and refer to it for support. But you can see that price is still finding resistance off of this below here. It doesn't want to breach below that, and the only time that it did was to meet the opening range gap, and this entire range of nested imbalances and liquidity voids. The one thing I want to know that I don't like for being bullish is that these lows are very relative. So I don't want to see this being engineered sell-side liquidity for price to be taken later. But that will depend on this inversion gap here if price wants to claim it. But going back on the 5-minute chart, you can see that around the intermediate term low, which is perfectly nested at the daily CB low, once we moved into it, you can see that we have pretty heavy rejections off of the arrays that lie underneath it, which is everything labeled here. If we were truly bearish and if this low was wanted to be market shifted through, then you can expect that these arrays will not hold as they are doing right now. Jump on the 1 minute, this sweep here, we have a low, and then we have a high, and then we have this lower low. You know, the breaker itself is it's still holding. I don't have access to the second chart, but I'm pretty sure on the seconds there's going to be a imbalance within here, or within this wick, or within this wick here, and that held. And even without the imbalance, you can just draw on the wick, and you can see that it's holding the concept of encroachment as well as the daily C below. So the breaker that is within here is holding. As you can see now, price is reclaiming this inversion gap here. So let's change that premium reclaim gap, which is now a discount reclaim gap. See, price refers to it once more, rejects off of the concept of encroachment, and now it is moving higher into the inversed first presentation gap. I'm not going to be expecting this to hold. If anything, wait, I actually want to check something before I make a bold statement. Whether this holds or not is I'm not sure. For right now, I'm not sure, but I know that this breaker held here. The breaker within here held, and it's sending price higher. And this inversion here is a sign that price wants to switch order flow. This is evidence as well, and as well as this low here being sent down into the discount reclaim gap, respecting the consequent enforcement and then sending it higher. The first presentation gap right now is being faced through, and as you can see, the consequent enforcement is being breached. So I'm not going to be expecting this to hold. I was skeptical at first because it wasn't a deep premium, and if price was going to move lower, it was going to move lower off of that, especially this order block here. That's the obstacle for price to move through if it wants to move higher towards just equal highs. But yeah. I don't expect much on the day before CPI. Me too. I completely agree with you. My rules for no trading days, I'll put it up right now actually. Trading plan, I have it here. So my my no trading days are days before CPI and NFP. No news Monday unless on-former news release over the weekend and bank holidays. So here, I'll put it over here. Today is just strict tape reading. I'm comfortable with sitting still, and I'm just gonna be watching what price does. That's why I live stream. I don't usually live stream whenever I live trade. Whenever I live trade, I like to keep my things personal, and I like to um, do it on my own. Exactly, they're gonna manipulate the shit out of it, or it's gonna consolidate. Um, Usually days like pre-CPI, they're really similar to like the first 30 minutes before or the first hour before FOMC. It's usually either, you're right, it's either going to consolidate or going to manipulate. And with what price is doing right now, being very indecisive, I wouldn't be too surprised if it just consolidates all day, especially with how overnight trended. So I have zero interest in putting on anything. That's why I'm live streaming. So yeah, I'm just gonna be watching. We're back within the reclaimed gap. Price seems to have found resistance off of this order block, this last close candle here, and it's dropping back into this fair value gap here. 10 o'clock open is in 1 minute, and that is the third 4-hour open of the day. So either if that open either pushes higher or pushes lower, can tell us a lot. But this reclaimed gap is about to be close to. If it doesn't, then that's it. We're back within the opening range gap, which once we moved into the consequent encroachment level of it and we dipped back higher, we started to find support off of it. So you can see this wick here that dips down into it, rejects higher, and now we're back into that level. See the last 2 seconds, we're retreating back to within the level. So we closed perfectly within it, and we're experiencing some volatility right now within 10 a.m. open. Either it's gonna consolidate or it's gonna manipulate. So if it does manipulate, then the 4-hour wick entered this inversion here as well. I want to see what price does with these imbalances here. It's gonna move up into this gap here just to give that candle a wick, the same premise as we were using. So just really quickly, I want to explain something about the devil's mark. So you can see how on a lower scale where this candle here doesn't have an up close wick, and it's inside of a fair value gap. So price will often want to go back into these gaps, especially these gaps because you don't have a wick. You know, it's probably gonna go in there and give it a wick. So the same thing on the hourly chart, but it's only if order flow allows it. And you can see here, we have this candle here, doesn't have a lower wick, and price often wants to give these candles a wick, as we just saw in the moment. How's everyone doing in the chat? Price is digging into the consequent of the first presentation gap. I want to see if it wants to reject lower off of it or if it wants to push through it again. If it wants to push through it and it leaves this 2-minute gap here uninversed, then I think it's safe to say that this order block here that was respected can push through again. Back into this counter reclaim gap and starts to push a little bit higher. I want to see if there's a change in share delivery off of this up close candle here being engulfed, hypothetically, if it will get engulfed. bouncing between two areas right now, ping-ponging between this discounted gap and this premium gap. What is your drawn liquidity on the higher time? Well, let's take a look. So daily time frame, we're inside of this daily city. But what's more important to me is what's happening on the 4 hour. So you remember what happened with what I was saying the on Friday of last week. I was saying that if we do spend more time inside of this inversion weekly fair value gap, then the next drawn liquidity would most likely be 18,666. And that's what we breached. We went down, we breached it, and then the array that was overlapping with that level was this intermediate term low. And as you can see, once we dipped down below this intermediate term low, it was nested inside of this new week opening gap. And once we took it, we made a new intermediate term. Intermediate term. We made a new week opening gap. So the rejection just off of this intermediate term low, creating a rejection block, is especially with this gap here being respected. What I was thinking initially is on the 15-minute, once we started to go back above this high here and we started to drop lower, and we found resistance off this bullish breaker, I started to lean more on the bullish side. But for right now, there's no real drawn liquidity. It's a directional bias. I'm not sure where prices want to head to. Scenarios where I have a read on where price wants to head to as a price level, like a price point, that would be a scenario on like this one. In this scenario, I'm looking to see if this intermediate term low being taken is going to hold as a sweep or not. And what it's looking like right now with the order flow, with this bullish breaker, this SMT, and what's happening right now, it looks like the intermediate term low being taken is a sweep. So, but if I had to like confirm a price point, I can't. I can't tell you a real drawn liquidity. I can't tell you a price level that I want to see price breach because there's nothing that's telling me we want to reach this level because this level has been invalidated. See how price stabs into the first presentation gap inversion, consequent encroachment, watches the lower, closes through the weekly gap. So I want to take that off and hop on in 2 minutes. I want to see what is price doing. So using the same idea I spoke about right now, this is an intermediate term low. I want to see if price wants to shift through it or if it wants to sweep it. And once we get that answer, then we can start to have a level. So let me draw this on quickly. I want to type on a couple of question marks, but I still don't know what that is. And the way I'll know what it is from lower time frame. If we inverse this volume imbalance, for example. And if we do inverse this volume imbalance, for example, then I can start to frame my drawn liquidity. It's the same thing that happened here. I was saying if price wants to close above this first presentation inversion and reclaim it, then drawn liquidity will probably be these two equal highs and then this daily CB high. But since we didn't do that, then I don't have drawn liquidity. Now the same thing here. See, price closes above this volume imbalance, and I said that the drawn liquidity might be these highs or this high, and you see now price is pushing higher. And whether it wants to hold this is an inversion or not, I don't care. It doesn't matter to me if it does that or not. But yeah, so there you go. You can start to frame that low being taken as sweep. You don't have to magically know everything. You have to wait and see what price gives you. And once it gives you something that you like, then you can start to frame drawn liquidity. Because the drawn liquidity is basically the number one thing that you want to be looking at when trading. The entry model is, I don't want to say it's easy, but you can learn it. The drawn liquidity, you have to adapt to it. You have to be able to know when price is trying to tell you where it wants to go or not. I can right now go and say, okay, we are in a 4 hour fair value gap, we're gonna move higher. But what if it inverses it? Then what? My drawn liquidity messed up. I'm gonna take a wrong entry. I'm gonna take a loss. So it's okay to not have drawn liquidity. It's okay to let price do what it's gonna do until you can frame a draw. Last month I think I traded maybe 8 times. Now whether that was a green or red month, it's none of your guys' business. But I'm putting it in perspective. Price is fully closed through this presentation gap. I wanna put it as a declined gap. Price gonna dip back into it and hopefully find resistance off of the consequent level. If it does that or if it doesn't, again, doesn't matter. So yeah, Nico, if you're still watching, I hope that this low being taken was a good example of basically putting things into perspective on a smart time frame of what I want to see on the 4 hour. So on the 4 hour, the same idea of this distributor low being taken. When it was first happening, I had no idea what price was going to do. I had two outcomes. Either price was going to shift through it, and if it was going to shift through it, I would have been able to tell on lower time frame. And if it was going to sweep it, I would have also been able to tell on lower time frame. And based on what price did on lower time frame, especially with this retracement here rejecting higher, I was able to kind of feel that price was probably going to treat this as a sweep, and you could try to frame longs. And the same exact thing on this one. Um, it's clear on to me. So the same idea. Once this intermediate term low got taken, I did not know what was going to happen after. I wanted to see hints or evidence that price was going to do what it was going to do. So if we go into replay mode, let's go back here. As price took that low, the body was floating around this level here, and we didn't know if it was going to be a sweep or a shift. We didn't have a narrative. I guess you could say that the narrative was that it's going to be shifted through just because of the respect of this first presentation gap. But that's why you don't jump to conclusions. You wait to see what price gives you. You don't immediately say, okay, price has went into a reclaimed or inversion gap, sorry, then took a low. It's decently through it, so I'm gonna short until these relatively equal lows. That's not how it works. You wait, you see what price wants to do around these levels. This is term low being taken, even though we were delivering from a inversion gap. It got taken. On the 1 minute, what did we wait for? We waited for this inversion. What did I say? You could rewind. I've enabled that. We said that probably if price wants to take this high and this high, price would most likely inverse this volume imbalance as evidence that this low being taken is a sweep. If you play forward, price took it, and now whatever price does now is using the same kind of ideology that we just did right now. So notice how price is leaving buy side and constantly taking sell side. Yes, it definitely does. I also have no idea what price is doing. I'm waiting for after CPI. Same here. I'm just looking at intraday price action. I'm just picking up things that price does, especially in lifetime, because watching candles print, I've noticed that it has helped me with dealing with live action when I'm trading. As he says, you have to be comfortable with sitting still. We're back in the opening range gap, consequent encroachment. This fair value gap here that was holding price until this high was taken. I want to draw out this wick here. Every rejection was off of the 0.25 level, so that sent us lower. I'll take off this sweep. I want to take off this volume imbalance because we just completely pushed through it. And I want to go on a 5 minute before seeing anything. There's sell side meaning this low, so that could be a low that wants to be hunted. The opening range gap low has been, the opening range gap has been fully filled. And if we go on the 15-minute time frame, here is another intermediate from low. We can start to frame off the exact same thing. So I want to change this here. I want to make that as a low. I want to see if price wants to shift through that low, or if it wants to respect that low as a soup and start to inverse these gaps here and start to move higher, and then we can start to frame the equal highs. But if it wants to shift through that low, then you can start to expect that price is going to respect these premium areas instead of push through them. I'm going to be getting off of this live at 10:30 EST, just because I want to check what ICT is talking about. So look, after that low was taken, you can see that price runs into this gap here, finds resistance, pushes lower, past this low here, and as I mentioned previously, price seems to be respecting old highs and pushing through old lows. See, push through this low, push through this low, and didn't push through this low, but it just pushed through it now. And now this low, now this low, and then this low, then this low. This gap here. Institutional overflow entry drill. Check back on the 5-minute low. Sell side has been breached. So I want to see what price is going to do if it runs back higher and takes this high. I want to see if it displaces quickly lower, and I want to see if it either pushes through it fast to the upside. How do you differentiate between a turtle soup and a microstructure shift? Do you just watch what PDAs are expected afterwards or as you want to it? Well, the market shift or the turtle soup is basically my model. And the way that it works is basically, uh, let's say you have an array here and you have oops, you have a move into the array, then you have some consolidation. And if price was, bullish, you'd expect price to go down lower and remain in respect to this PDA array, to the bigger time frame PDA array that this low was nested in. And then once price takes this low, you can start to see a breaker start to form. So we have the low, high, and now we have the lower low. So I wanna, this is what I'm marking off as the soup. So we have that low being breached. Then once that low is breached, you can try to find a array in equilibrium or in premium in this case. Then once you can start to see that array is being violated, like seeing price goes above the concept of encroachment, usually what I like to do is take a entry off of the fair value gap here, or if the inversion close isn't super too crazy, like me, if it's like this, then I won't take it. If the inversion close is like this, then I might take it. But yeah, and then you can try to anticipate the higher high of the breaker being taken here, and then this push lower here would become a order block for price to have a second stage delivery, which goes to my second model, which is just a second stage distribution model towards the market maker beating range. So it's important that the breaker high is not in a discount, So see that these highs here, which would be the high of the breaker, they are in a discount. So they aren't in a premium. Sorry, I messed up what I was saying. If the breaker high is in a premium, then it's going to be less probability because it's likely that this high here, these highs, if they were in a premium, they would be engineered highs because price engineers liquidity and discount for price to move into a premium to then return to the liquidity and discount to take it and then return to the liquidity and premium. That's basically the cycle of how price moves. And yeah, so the second distribution model I was talking about was once we have the breaker, the low, high, lower low, and we have the higher high, you can take the trade towards the higher high. Let's say you have a fair value gap there, have your stop at the breaker low, you could target the higher high. That would be the first stage model. And then let's say price trades back lower into the breaker high or the order block that you anticipated being engulfed. You can start to see the same idea of here. You can literally find the array and equilibrium, or if a value gap, take it, and then you can take the leading range high. So that's basically how I frame my turtle soups versus the market shifts. And the reason that I like it is because it's very fractal, and honestly, it takes some experience, it takes some reading of price, but yeah. So look, pay attention here. So the same idea I was talking about. So we have a fair value gap here, and we have a nested high inside it. If you were looking to be bearish, you would have, let's say you have the 15-second chart. Once price takes that high, you want to go on lower time frame, and you want to start to see if price wants to start to move lower off taking that high. But as you can see just from the 1-minute chart, once we take that high, we fully engulf this wick here, and then look, we can measure out the wick of the high. Look how this candle here dips down lower, fills the wick, and then starts trade higher. So in this case, what would you want to be waiting for? You would want to be waiting for the lower time frame for value gap to have the same exact move. So let's say you're looking at this on the 15-second chart. You're looking at this wick move over here. What would that look like? So you have the nested high. Let's say that's nested high. Price trades lower from it, trades higher, and fully engulfs it. Price would have a fair value gap here. This wick lower would be into it. What you'd want to wait for an entry model long, in this case, is the same thing that I just spoke about, a sweep of that low, analysis on this price swing here, make sure that this high here is in a premium, in this case, of this dealing range, or I'm sorry, in a discount of this dealing range, and then once price inverses that, or you have a fair value gap, you can take that towards the dealing range high, which is this candle high here. So using that ideology, you want to see if price, if it takes this low, is it going to shift through it, or is it going to soup it and start to move higher towards this candle high? So let's keep that here and leave it as set side liquidity, lower time frame, intermediate, term low. So you want to see if price wants to shift to that low, if it wants to take it and then try to push higher towards this candle high. Thank you for explaining. Yeah, no problem. No problem at all, man. So we're taking set side right now. I want to see if it gets completely pushed through or if it just completely just switch. Well, the run of this low towards this high here was actually a very nice smooth move, taking the inversion on this. But no trades because pre-CPI. But that was a very nice move, in my opinion. So you can see, Nico, price is resisting off of the low and starts to push higher. Now, you can confidently say that price might go higher here to breach the 744.50. Now, that's how you finish on liquidity. That's how you have high probability trades. I'm gonna show this on here. Do what? And there's drawn liquidity. So, Nico, if you're still watching, I hope that cleared up kind of how I think when I'm trading. And yeah, I hope that example was useful. If you're still watching, please let me know if you have any feedback. Any more questions, I'll be glad to answer. I'm going to be ending this stream in around 3 minutes and a half. So if you had a lower time frame, I guarantee you there would have been a lower time frame fair value gap entry or a lower time frame inversion entry towards that high here. I need to buy the 15-second chart. I have the essential but not the premium. It was. Thanks again. No more questions for now. Are you streaming tomorrow? Tomorrow I will not be streaming because I am going into tomorrow with the intention of putting on a trade. So if that is unfortunate for you, I'm sorry, but I'll be trading. I'll be live on Friday. Friday this week, I think I'll be live. Then I'm shooting on Friday for sure. Yeah, thank you, man. Appreciate that. So there's around a minute and a half left until 10:30. I hope you guys enjoyed this live stream, especially you, Nico. I enjoyed you having on today. I enjoyed the questions. It's always nice to to answer questions because it also reinforces my thinking. I'm gonna definitely be watching my own stream once or twice again just to ingest what I was trying to say because sometimes I get ahead of myself and my brain thinks more faster than I can speak. So it will be helpful to uh, you know rewatch my own streams. But I'm gonna be closing the live stream now. I hope everyone enjoyed and learned something. And yeah, if price does do some interesting things, I might be doing a recap. But just as we close right now, the 15-minute intermediate terminal here that we saw being taken. Nico, pay attention to what I'm saying here. this low here, because we took that. There's that low. Once we took it, we use the same thing that we applied onto here and applied onto this low being taken. Now applied onto the 4-hour low being taken. We apply that this low here being taken and price treating that with price action evidence that it's a soup with this respect of this low here, which we said is a lower time frame intermediate term low, and this fair value gap here being open, which is a price signature that price wants to move higher quickly. The inversions happen here. You can assume that price wants to head over for this high here. And if it doesn't, that's completely fine. It's a Tuesday with pre-CPI, and yeah. So I'm gonna end the stream now. I hope everyone enjoyed, and thank you all for watching.